okay, like every single time to the NFP number, but this time the jobs, because they looked a bit not unexpected precisely, but after we consider what we really saw in August, there is a lot of attention this time on the US jobs. And on the backside, let's not forget that it's the inflation concerns and all these pretty much story and the yields um, yeah, the yield story ahead of pretty much ahead of a potential tampering from the Fed in November. So we're not gonna see Fed in October. So that's even another reason why the U.S. jobs today are quite crucial, even though it's unlikely to change Fed's policy, Fed's potential action within the year. But yeah, we have seen actually so far a bit of a the risk on mode keep actually remain as the key driver of the market for the whole October so far. So it's the second week in a row. As I mentioned, inflation concerns continue to weigh, even though we have an obstacle behind us. I'm referring to the debt limit in the US. So that's out of the way. But still, it's all about the central banks. It's all about worries over tightening financial conditions, and all this is what keeps actually driving equities. For example, a bit mixed. Okay, it's ahead of the earnings season. With this, as I said, I should remind you that the earnings season for the third quarter, I already started. So just a quick reminder that next week we're gonna have the big banks reporting their earnings for the third quarter. But yeah, other than other other than all these concerns, we have seen equities remain mixed. While since this morning, we have seen dollar on a down run ahead of the non-farm payroll. So it's don't just to let you know, guys, that we keep saying since I don't know, the beginning of October, that it's all about treasury yields, and this is real, because a climb in treasury yields is something that immediately impacts dollar. So any preliminary taper adjustments that the market are taking affects treasuries, and that is correlated with dollars. So everything that we see in the market is correlated. Don't forget that. So even the anticipation of a around 5 million jobs from NFP this afternoon, so in less than 6 minutes ahead of us. I will share the calendar soonish, just to let's just quickly oh, a lot of questions. Hello, everyone. Hello, Benjamin. Hello, Edgub. Um, okay, we have a technical question. I want to question, which is better, waiting for a pullback or enter on a breakout? Okay, a pullback could also it could also means entering a breakout of a support level. So a comp of that, I would say, depends on your style there, and depends on your on which entry strategy you have actually developed. So a pullback actually it's a breakout of a support level. So it's the same pretty much thing. Okay, so let's leave technicals for now. Hello, everyone. Hello, Wood, Sagin. So, Wood, straight to the point. Dollar up or down? So I will share quickly the dollar index actually chart right now. So as you can see, let me just quickly type this up. Okay, just give me a second, guys, to set up. So here is the dollar index, 1 hour chart. Okay, perfect. Okay, so apparently there was a pullback. There's a strong pullback, as you can see over here, ahead of the NFP that started in this morning in the US, in the European session. Sorry, so the sorry, just, the number, as I already mentioned, is expected at 500 around, actually. Okay, it varies from 488, for example, that I have from FX3s over here, 488,000 up to have even seen somewhere a pick up to 568,000, so 5 million 68. However, um, what actually is concern about today's the main concerns about today's jobs, as I already mentioned, is that they will be key in regards to the Fed action, but not actually whether they will taper or not. It is expected that they will taper, so this is quite certain. But the amount and the timing that they will proceed, that if the number today it missed expectations significantly, then they might need to start tapering, and with actually to double the amount, or whatever, to increase significantly the amount of tapering that they initially thought. So it's not so much whether they will taper or not. That's pretty much it's pretty much certain, but how fast they will do it and the amount that they were going to do it. So this is why today's data are quite key. And we have seen a bit of a mixed conditions in the reports lately. We've seen like ups and downs in the claims, ADP. Okay, it stopped to be a key indicator for NFP. The correlation, especially the pandemic years, is not like strong, but is still something that adds to a potential downtrend of jobs today. So you asked me about dollars. Sorry, you asked me about dollars. So we have a pullback, as you can see over here. It has to do with all these yields differential, all the yields play. So the fact that we have seen actually a climb of the treasury yield, something that is driving the dollar lower. So dollar remains like on the back doors, on the downtrend against all the major currencies so far. Just a minute away from the NFP, by the way. So I think it's time to. So a mist. By the way, mist is expected to depreciate even more the dollar. Just to quickly reply to your question, Wood Trader. Okay, a mist it's bad for the currency, right? So it could weigh even further to the dollar, despite the claims and the ADP as well. So let me share the calendar, okay? Because we're gonna have the number out soon. 8 minutes to news. Today, gold update. We're gonna see gold, guys. We're gonna see dollar index. Gold. Well, a lot of gold traders. I don't know what's going on lately. Okay. Say he's asking whether he will continue. Okay, the numbers are out. I will get back to you in a second, Chai. So numbers are out, and where is it? Oh my God, that's a massive miss. This is actually what the market was afraid of. A massive bid today. You can see that is actually, and even the August number have revised higher, but that's actually uh, uh, 2/5 of what was expected. So as you can see, and you cannot see, okay, let's stick to it. Let's analyze firstly the report, okay? Since you are seeing the calendar right now. So big miss of non-farm payrolls, big dip, unemployment unemployment 4.8%. Okay, a bit eased a bit in comparison with August, which was at 5.2%. So that was the positive side of the report. Average hourly earnings also above expectations, so another plus. But we have seen that the August revision is lower, so from 8.6% that was the average hourly earnings in August, it revised lower. So that's why dollar weakens. That's actually an overall bad reporting, regardless the slowdown of the unemployment, the decline of the unemployment, sorry, and the slight appreciation of the hourly earnings. This is a big miss. So that's something that it boosted and should actually weigh on the dollar. As we can see, let's shift to the market. Let's shift to the MT4 so you can see the decline. I'm sure that you can see it anywhere in your PCs. So dipped on the announcement. Let's put the 15 minutes chart on. Come on. Sorry guys, a bit late. Come on. Why it's stuck? Here we are. A big dip on the announcement. Dollar index at 93.90. That's it. Let me just double check right here. So 93.95. So this is the 30 minutes chart, extended a bit to the downside on the announcement. Okay, you asked me before the release, by the way, Tracy, whether you should continue trading or pause due to the NFP. As we keep saying, if there is the announcement of a very very volatile event such as the NFP, it's because of the noise there is out there during the announcement. It's better to stay out until the market counts down. But that's solely up to you guys. So there are people that they love trading the news, but that's mainly up to you. So okay, dip down to 93.95. That is something, guys, that could. So we said that regardless the number, the Fed will actually proceed to a tapering. But the fact that for September we have seen the NFP declining and actually missing expectation quite bigly, and this is the second straight month. I remember we had August also miss expectations as well, so it's the second miss that we have, the second consecutive miss that we have from payroll. So this will give to the Fed a push to proceed to a higher portion, if you prefer, of tapering that what they initially announced. Sorry. So let me just check my news feed as well. Okay. So so retreats, trying to recover, still stuck at 94, as you can see over here. So if I go up to a higher scale, we could see that it remains at 3 days range. So still actually in the middle of this. This look like to be a descending triangle for October so far, at least. But okay, we don't really have some here. See, so you can see that, guys. So a pullback, but still at 3 days range so far. So we need to wait a bit for this 30 minutes candle to close, okay? But the fundamentally wise, this is something that could continue weighing on the dollar, especially especially if we consider all the uncertainties that are out there, and that we already discussed in the beginning of this live. So maybe the debt limit might be out of the way, but as we keep seeing for the whole 2021, actually, the markets are going in line with their anticipations on central banks. So if there is a theme around 2021, it would be central banks. Okay, so the fiscal policies uncertainties. So as we said, this is something that um, it could continue weighing on the dollar and the U.S. markets ahead of November 3rd, which is the Fed meeting. So let me check a bit what's going on over here. Okay. So, okay, definitely not a good report that Mr. Powell was expecting. So they might wait a bit. Actually, they may shift. The tapering might shift to December or even first quarter of. So okay, guys, just to like simplify a bit the things. The I can see that who is here? I saw somewhere. Werner was thinking, okay, what did I do wrong? How did I get it so wrong? You didn't get it wrong, but it is what it is. Okay, so um, uh, the forecast was indeed for around 4 to 5 million jobs. Okay, but and okay, a good report that, as we said, it will be like a card to the Fed to proceed with their quantitative easing happening in November. So now that we have the numbers out and they missed bigly for a second consecutive month. So what we could conclude from that is that the Fed, more precisely Mr. Powell, didn't get what he wanted. He wanted a good signal in order to be sure that November is a good timing for tapering. They didn't get that. So that means that they should shift their actions, okay? Maybe by actually December or even the first quarter of the first months of the new year. So uh, they could come out on November saying that they won't take any action, they will not start quantitative easing tapering. So this changed the whole situation, the anticipations in regards to the central bank's actions. So growth, as you can see globally, not solely in the US, growth has been revised sharply lower globally. We have the supply shortage all over the world. We have the China concerns, something that China impacts the impacts the exports the exports of the in Europe, in US as well. So the growth in the third quarter, and something that might continue in the fourth quarter as well, the growth might continue revising lower. Okay, so it's all this that we have said, the supply shortage, the policymakers, that they could be more reluctant to start to reduce the pace of asset, but this is now the case that they cannot, the Fed cannot really start reducing after this, the jobs at least. So jobs remains a key, remains key for Fed. So this make missed is something that it poses their plans for now. So it is what it is, my dear Werner. Don't try to explain why you get it wrong. You didn't. Okay. So let's see what is from now onwards. Okay. So another 20 minutes for this candle to close. So let's see a bit. Let's shift to different assets. Okay, actually, I haven't. I've missed it. We've missed seeing the Canadian jobs. Sorry for that, guys. Let's shift to dollar CAD. So, in which there is a dip due to the weaker dollar. So the jobs in Canada on the other side, okay, we had actually double. Shall I? I will actually share again, just quickly, because over here you can see the exact opposite conditions. So you can see that it double the net change in employment is double what was expected. Unemployment, okay, is lower than August, but remain in line with expectations. But an overall quite good report from Canada, in contrast with what we have seen in the US. So this can be this actually is being presented by the CAD the loonie over here. Okay, just dollar CAD under pressure. Okay, down to 124.93. Let's not forget that the Canadian dollar is being benefited by the high energy prices, oil. Okay, strong correlation. So that's another thing that supports the Canadian dollar ahead of a weaker overall US dollar. So 124.94, sorry. So breaking the 125 level. So it's like we have like a break of the more than a month's support. Say back to July, end of July. So August, September, it was a floor that has been retested, broken today, but with the momentum supporting the decline, as we said, we have the higher energy prices, something that supports quite well the Canadian dollar. So 1, 2, 3, 4, 5, 6, 7 consecutive days to the downside of for like seven consecutive days of the 127 highs, and now down to 125, breaking that level and extending lower. So let me just put the daily ground on over here. So, and if I just shift it, you will be able to see MACD as well. So, okay, perfect. So I'd like to show you the. Okay, it looks a bit like a head and shoulder, even though it's not. It's not really a head and shoulder, but you can see this lower highs and this shift on the sentiment. MACD, the daily MACD, that's how I mean daily. So consider this is the overall outlook. So shift onto the negative territory for MACD over here, even though we need confirmation, we need this signal line to get down and continue extending lower. We need a bearish crossover here in order to convert this overall shift of the outlook into the downside. Parabolic SAR above price, so a bear sign. RSI keep pointing lower and keep like it's ready to break the 30 barrier. So momentum is overall presenting a bearish, increasing bearish bias as the asset keeps declining. So actually today's closure will be key for the Canadian for the loonie over here, because the a closure below this support, this 2-month support area, could open the doors further to the downside too, with the next immediate support level down to this double bottom and the 124.15 territory, or even lower. So the asset has already reverse nearly 50% of the gains seen this year. That's why um, um, that's why the continuation of this decline, which looks quite likely, we consider the fundamental reasons that they have drove dollar cut to the downside. They could continue into the new quarter, into the fourth quarter. So yeah, 124 or even 123 area should be, we should turn our attention to in the long term at least. So good report from Canada, bad report from US. Let me see whether there's anything else I should check my news feed. Okay, I'll take your questions one by one then. So dollar cat, we already covered dollar cat in the hourly chart. Momentum is we had a big massive a negative candle over here in the in the short term. Bearish actually momentum indicators are extending lower. So let's shift to gold since many of you asked for it. I would like to see a bit of a news feed whether I'm missing something. Yields move lower except the long bonds. Okay, so I cannot really show you a table with the yields, but all the US bonds are like to they are keep declining except the long term one, which is the 30-year one. Okay, so and actually before I cover gold, I will reply to Warehouse, which I'm asking about USA 100. Yeah. So just oops, what have I done over here? Yeah, we are okay. White. So USA 100 over here. You asked about USA 100, right? Yes, you asked about USA 100. So let's just put the 30 minutes chart. We can see that the oof. So that's I don't know how helpful the white color is, but we had a big boost. Okay, Facebook questions. I forgot about to open the Facebook comments. So we had a bit boost before. If I need to put the 5 minute chart so we can have a look of how the market react before the release and after the release. So just bear with me for a second, guys. Sorry about that. It's difficult for me to shift from the black chart to the white chart. So this is before. Yeah. Okay, this is after. So before the release, we had like a depreciation, like a bit of a dip to the stocks, slightly dip. This is a 5 minute chart. Let's not forget that. So a bit of a decline, but on the announcement, we have a big boost. Here is the USA 100, reached like a breath away from the 15,000 territory and a quick pull back again, back down to where it was on the pre-NFP release. So I will go a bit higher idea Warehouse to see where we are standing. So it's back. USA 100 is back where it opened after spiking and retesting that 15,000 territory. So back down to the 20-day moving average. So okay, we have also USA 30. Okay. So that was on the dip of the bonds. Okay, so that is what really happened. So dollar declines as actually, where was it? Back. Come on, come on, come on, come on. Sorry. As you can see, the dollar decline has paused a bit for now, so remains sustaining a floor at 94. So, and this is actually across all the majors, okay? But Wall Street's reaction, it's a bit interesting. So let me get, so you keep asking, I have a lot of people asking about stocks and more precisely the US ones. So we have USA 100 over here, and let's have USA 30 as well. Okay, just quickly see. Okay, so that's a 15 minutes chart. I don't know whether I can have this. Oh, side by side. Come on. Sorry, sorry, guys. I accidentally closed my. Thank you, Stuart. Okay, so I would like to put this side by side, if it's possible. No, it's not. So, okay, let's see with the. Okay, Stuart gave me something very interesting. It's a breakdown of the jobs actually, but let me just fix a bit this mess over here. So I would like to show you the US stocks side by side so you could see the reaction of the Wall Street. So since you are keep asking about stocks, just okay, 1 hour, 1 hour. Actually, let's go down to the 15 minutes. 15 minutes. So let's see the breakdown. So we have okay, the participation rate increased by 61.6%, while the weekly working Saturday, the work week is up to 34 hours, 34.8. So that means that the people that they were already working, okay, they weren't unemployed, they were actually employed, they work longer and harder for more wages. That's why the average earnings actually increase. So the people that they actually were employed kept their jobs. Okay, so that's why we didn't have, if I remember probably, we didn't have actually, we had a decline in the unemployment. So people that they had their jobs, they haven't really, they as Stuart is informed over here, the work week and the participation rate presents that the people that they were working are working longer, harder, but they got paid more. So that's why we didn't had an increase on the unemployment rate. But on the other side, is still actually this is still a poor number after all. Okay, a bit of a just okay. So let's get back to the Wall Street. Big. So you can see a bit of a very opposite behavior from the Wall Street, a bit of a mixed continuation of the mixed conditions in the equity markets. On the left hand side, I have USA 100. On the left hand side, I have USA 30. So USA 100 actually um, boosted, as we said earlier, after the release of the news. So just retesting the thousand barrel, but and then put back quickly. While on the other side, the Dow Jones, the USA 30 actually dip and remains on the and remains actually quite low outside today's range so far. So a dip on the announcement. Let me just show you. So here we are, down to 34,539, trying to recover, but remains below the it remains actually to where was it? It remains on the low territory of the last few hours. So very, very different, quite different behavior initially from these two stocks. So let's take step by step. So, okay, guys, of course, we need to wait for the markets to calm down a bit, but let's see the overall picture of the US major indices. So, I will get back to the 1 hour chart, and as you can see in both in both indices over here, we have seen, this is the hourly chart, we have seen a decisive pullback since yesterday ahead of the data, but the assets actually managed to sustain the gains that we have seen for the week. So if I just shift to the daily chart, you can see that the assets remain at the nearly 10 days, nearly 10 days high territory. So sustaining this rebound that we have seen since last week. So actually since the beginning of the week, to be more precise. So the in general, in the long term, the equity markets, so the USA 100 and USA 30 remains in an overall negative outlook. As you can see, the USA 100 failed so far to break the 20-day moving average, even though this rebound over here is turning the eyes quite higher, but the 15,000 remains a key obstacle for the shift of the sentiment in the USA 100, while on the other side, USA 30 over here remains, let me just use this, okay, perfect, remains at the low territory of the last 3 months. So it managed to rebound and to open today and close yesterday, so it remained today well above the 20-day moving average. However, the key resistance for this asset remains the 50-day moving average at the 30, nearly 35,000 level, 35,000 barrel. So okay, here we are. So this level could, once this level has been triggered, then we could state that it's back to the continuation of this strong rally seen since last year. For the time being, the overall outlook remains a bit choppy, a bit sideways. As you can see, we've seen it's keep actually ranging between the 33 and 35,000 level. So that's USA 30. So this is a 1 hour chart, choppy, a pullback, small body candles, lack of decision over here. As long as the markets are not really calmed down a bit after the NFP, we won't really have a clear vision of the intraday picture of these assets now. So I'm referring to USA 30, right? So the USA 100 over here had a big boost, came back to the yesterday's highs. So 14993 remains the immediate resistance area for USA 100 over here. And let me just zoom out a bit. So, okay. So USA 100 is remains on bid apparently. In contrast with USA 30. Okay. So USA 100, don't forget that it's a tech heavy stock. So the fact that the earnings season started is something that could support it, since the earnings season is expected to be another robust one. But let's wait and see. So for the time being, USA 100 for my friend Warhouse. I don't know how to pronounce that. So a boost a boost breaking, and we have a breaking the previous relative high. So a bullish cross on the fast moving average as well, while it reached to the upper Bollinger. So over here we could see some retracement, but the asset remains kept floor at 14,837 for two consecutive days after the rally we've seen in the beginning of the week. So intraday USA 100 and in the medium term as well remain to the quite positive. So intraday positive, in the medium term remain below the 20-day moving average. So it will be key to see whether it will reverse. It will put back again into the continuation of this downtrend since the beginning of September. So let's move on and get back to the gold. Since okay. Yes, gold. Okay, so what's that? Should be somewhere here. Okay. Oh, it's in front of me. Okay, sorry, guys. Okay, perfect. So, as we have seen the very weak September report, weighted on the dollar, we've seen a shift to the gold instead. A big jump on gold up to 1776, and I will get back to the daily chart to see how massive this boost was, guys. And we'll need to hide USA 100 and get back to the gold question. So, um, okay, so this is a daily chart, but I put the daily chart on firstly because I wanted you to see how massive the boost was after the very weak September jump. So breaking our immediate resistance 1770 that was seen last week and has been sustained for 11 consecutive days, extending gains above the 20-day moving average, breaking the latest relative high, and reversing. That should be more than 40% of month's lows. Let's above month decline. Let's see. Yeah, that's 50% actually. It reversed 50% of the losses that we have since the beginning of September. So on the so gold, actually the safe haven gold has seen a boost, and is currently retesting the 50% retracement level, which has been sustained like a nice floor in August. So if I zoom out even more, we could see that now we shifted to the even the weekly chart. So we have seen that is turning for a second week in a row to the upside. So, but the momentum. Okay, that's in the long term. Let's not mix everything. Let's continue with the intraday picture. I don't want to confuse you. So, big boost outside, closing outside the hourly Bollingers. A big spike, as you can see over here in the momentum in the MACD lines, even though signal line is still at zero, something that adds concerns on whether this is over or already overbought. Actually, it is already overbought. It's already in the extreme levels outside the Bollinger. So we need technical, from the technical perspective, we need to see a bit of a correction, a bit of a pullback, because it has been overbought in the intraday picture. But the so this candle should so this candle needs another hour to close. This is a 4 hour candle. It's another hour to close. So um, as you can see, this boost is shifting the sentiment intraday, and the next level, the next resistance area for gold is taking us back to the mid of September. So it's really taking us back to another 10 to 20 dollars higher. So the next resistance area is coming at 1780 and 1787 territory for gold in an intraday basis. So back to the 20th of September. So if I just let me just try to put the expansions, the Fibonacci expansions on, even though they have already missed, so they've already hit it. That's not helpful at all. So on the spike, we have seen the asset. So let me just, okay, perfect. Yeah. So the based on the current rally, the 161 expansion is really clashing with the 61.8% um, um, 61.8% retracement level from the down leg seen in since the August peak. So shift on the outlook for gold to the positive side, to a positive outlook in the medium term and intraday so far, even though intraday it's overbought, so we might see a bit of a pullback as or a correction, a sideways move, who knows. So but overall the gold has shifted outlook, has shifted into from narrow, from a neutral that was in the last 5 days into a positive one, as it hit the 50% retracement level, and it has broken uh, um, the 1770 territory. So on ahead of the new week, if the closure tonight actually remains strong, then the next our eyes should turn back to the 1800s territory, coinciding with the 200-day moving average. Sorry, the 200-day moving average, and a breakout of the 61.8 Fibonacci level from the August down leg. So that's on gold intraday. Be a bit careful. This is an extreme condition, already overbought. So a correction might be necessary. So RSI keep pointing upwards. So if I put the 30 minutes chart on the 15 minutes chart, we don't like in a very very short time frame, such as the 15 minutes chart and the 30-minute chart. We haven't really seen a pullback yet of the fast momentum indicators. So you can see RSI still points upwards. MACD the same. Let me put also my stochastic, which is my fast indicator. So, oops, sorry. Yeah, stochastic keeps pointing upwards. So there is further steam to the upside, but be careful because I'm in a 15 minutes chart. Okay, so uh, um, a shift of the stochastic over here could signal the beginning of a potential either correction, pullback, or a sideways move, as like to correct this overbought condition. Now, there is a lack of strong correlation, especially since last year from with the NDP and NFP. ADP used to be a key indicator, but I'm afraid it's not nowadays, dear Bruno. So, um, and actually, markets obey with fundamentals. What is driving the markets is the market's perspective, is the market's um, views in regards to the fundamentals. So, uh, um, and the market's fear, to be honest, ahead of these fiscal policies uncertainties, and definitely due to the slowdown we have currently see. So the economy so far, especially since the reopening around March and April, we had a boost of the growth, but the things quickly change the last few months. So in the third quarter of the year, more precisely, they have slowed down significantly. So the fear of further slowdown is something that it has been taken into account. So I quite disagree with you. Everything that we have seen lately, it has to do with markets sentiment around fundamentals. So DP was positive, but market didn't even react well for dollar. Okay, yeah, it didn't because it was what is key is not the ADP but the NFP, and as I said, there is not a strong correlation anymore. Um, Dollar Swiss, yes, sure. Okay, Dollar Swiss. So similar with the Canadian one. Swiss, dollar Swiss to the downside. Big candles today on the as in the down leg, uh, getting the asset back to weeks lows. Right now, retesting the 0.90 to 60 territory. So let's have a look on the 30-minute chart to be precise. Bearish turn started and confirmed actually since the European session over here. We've seen this bearish cross and a pullback breaking decisively the 20 period moving average, consolidated a bit and then extended declines prior the release. The okay, let me just so guys, the reaction, the dollar, dollar declines have enjoyed the market's reaction, not solely dollar declines, but okay, since today is the dollar, it's all about the US economy and the Fed. The whatever we've seen, it has to do with the sentiment. It has to do with the sentiment rather than the dollar's self weakness, if you prefer. All had to do with the sentiment. At the end, the US data today indicated a steeper pace of recovery in the United States than that of its major uh, rivals. Sorry. So this is all has to do with the sentiment. So down, this is the 30 minutes chart, 192.60 already broken. Momentum shifted negative, but as you can see in the intraday, in the very short time frame, this is changing a bit. It's looking for a correction. Stochastic started slowly turning back upwards, starting to ready to exit the 20 the 20 the 20 try to break the 20 barrier, so trying to rebound. That's not still that's actually in the very short time frame, so we might see some kind of a consolidation around the 92.65 level before any resumption to the downside. So for the time being, dollar Swiss looks to be ready to enter some kind of a neutral outlook for the next few minutes, hours, who knows. So he has found the floor, however, at 92.60. So this bullish cross of stochastic and the fact that it's pointing slightly higher, the flattening of RSI is something that presents a bit of the need of a of stabilize to be stabilized a bit. So regardless of that, the 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 asset remains at 3 days lows. Okay, very close to 3 days lows. So immediate floor, you could see the immediate floor being sustained at 92.54, while a break of it could turn attention back to the 92.30 territory. Okay, so this, if I just shift going to the higher time frame, this is not standing properly. Okay, so yeah, a break of it could open the doors to the lows of 92. However, the dollar Swiss remains into an overall rally since an up channel, to be more precise, since the mid of August. So we need to see a decisive big break and a closure way below the 20-day moving average in order to imply that the overall positive outlook has changed. So overall outlook for dollar Swiss remains positive as long as the asset is being sustained above the 20-day moving average, and more precisely above this trend line that we have seen since the mid of August. So as long as it's sustained, the price sustains above it, the overall outlook remains positive for dollar Swiss. Intraday now, the outlook is negative. Next immediate support level is holding at 92.50. It has been retested yesterday as well. For the time being, there is a need of consolidation. We can see that everything has been flattened. So if I shift to the very short time frame, you can see that even the fast moving average started pointing to the right hand side, something that suggests that in the next few hours we might see stabilizing around the 92.70 territory, 92.60, 92.70 territory. So that was for dollar Swiss. On the flip side, just before we finish with it, the flip side, a rebound. Uh, um, if we using a rebound, guys, the resistance areas holding at the next immediate resistance level is at the 92.80, so around 20 pips higher. Never knew about NFP, so I guess you're new here, dear Carnwood. It might be the most volatile event release that we have every month. Uh, so it wiped out my $800 on dollar cat. Now I gotta start fresh. I guess you didn't have stop loss. You didn't do any risk management, my dear Garwood. So, yeah, that's why it's good to avoid having positions open during the NFP, guys. Okay, in order to avoid the noise that there is in the market, and the risk of being kicked out of the market, of hitting your stop loss. Okay, so be a bit more careful. Okay, Shwani. Oh, like a lot of new traders over here. I'm struggling with setting my stop losses and taking profit setting. I cannot get them right now. I lose a lot of my trading with charisma. Okay, Jabu, I cannot really explain right now or present some stop loss strategies, or where you should set your targets, etc. Please, since you are new here, what I understand is you are a new trader, if I'm not mistaken. I don't know. But it would be very, very helpful to go through our webinars, that they have to do with understanding the basics, but also the webinars that we have, in which we present some different strategies. So yeah, try to educate yourself, okay, before, since you're struggling with where you should set your stop loss and profit settings. We have some we present several strategies lately, webinars, strategy webinars, so have a look. I think this will be helpful for you. Pound yen. Oh, sure, Emmanuel. So pound yen. Pound yen. Here we are. So far, the yields differential are right, boosting this asset, and this remains the case. So pound yen over here. So nothing really changed on pound yen's outlook as far as I can see over here. So other than the yields differential between the yield and the Japanese bond, that it's getting wider and supports pretty much the pound against the Japanese yen. So the today's reversal looks to be like to be limited. So you can understand that from these long tails to the upside and these small body candles, that there is a lack of further bearish momentum intraday for pound yen. So it remains sustained. It remains a move above its 20-period moving average. There is the previous hourly candle closed with a long tail to the upside. Implying to, and a small body candle implying that the bears are really still sustain the control, the major control of the asset. Momentum remains positive, flatten a bit, so a bit of a consolidation, but well above zero. Here the MACD lines. RSI then same, flatten but well above 50, something that implied to a positive intraday bias. Stochastic pull back down, haven't managed to extend declines though, so remains above the 20, remains above the oversold territory. So as I said, the body of the candles and the wings and tails, if you prefer, of the last hour implies that this pullback looks a bit limited. If I shift to the 30 minutes chart, you can see that clearly. So small body candles, long tails to the upside. On the release, we have a big dip lower, but still sustaining a move above the 152 level, round number. Okay, so it's like This looks like it's running out of steam already. Everything has been flattened. So yeah, outlook remains positive intraday and in the medium term as well, my dear Emmanuel. So if I now that we have covered the actually before we go to the 1 hour chart, keep an eye. So the 152 remains a key support area for the asset intraday. Okay, a break of it could bring into our attention the next support area, which is around 20 pips lower, so 151.83. So a confluence of the lower Bollinger Bands and the latest down fractal. Okay, so these are the two immediate support levels intraday for the pound yen. While on the flip side, on the upside, rebound again could lead to the breakout of the latest high at 152.60 and could extend this 1, 2, 3, 4, 5, 6 days rally further, with the next resistance area to be at September's peak and the 92 152.80 territory. So that's the next resistance area for pound yen. Actually, if you ask me, it's this one. So it's the upper is the September's peak and the upper Bollingers at 153.18. So 152.80 up to the round 153 is the key resistance area on the continuation of this rally. If I zoom out further, you're gonna see that for those that are interested in the long term, though, uh, this the area that they have just the resistance area I have just I have just told you is crucial for the long term, for the medium term, more precisely for pound yen, because a reach and even a break, a bridge, even a break of this level of the 153, other than the fact that it could literally mean the breakout of the 61.8% Fibonacci level the uh, since the down leg since April to July, then this will open the doors to the levels that we have seen. Actually, to be more precise, to 5 years highs. So it will open the doors to the highs that we have seen back in April 2021 and that we have never seen since 2016. Okay, so yeah, and something that I just noticed is that we have a diversification. So let me just, we have a, so this signal, this, so we had a bottom over here back in July, then a, then a higher low, and then a lower low. So this is usually is a sign of convergence, of divergence, sorry, divergence of the momentum over here. So we have a divergence. So what that's supposed to mean? It's an initial sign that the momentum is shifting. Okay, so that strengthens the scenario of a return back eventually to 156 territory in the medium term for pound yen. Okay, but of course, we still need confirmation. We still need that decisive breakout of 153 level, and so on and so forth. This is in the medium term. Okay. Okay. The most important things that they move yen, my dear Emmanuel, is first of all is the different approach of the Bank of Japan in contrast with the rest of the major banks. So remember, Bank of Japan for many years now, is the it represents the so-called Japanism. They believe in a lower for longer low rates, accommodative policy, and they stick to it. While in contrast, in contrast with all the other major banks, they have signal that they are ready to start slowly tapering. They are ready to reduce the so far relief packages and the so far bond purchase programs, etc., and to start slowly in the next year to increase their rates, to hike their rates. But in contrast with all the other banks, Bank of Japan um, is not really on that side of the policy. They can remain constant to a lower for longer rate. So this is what is causing a wider and wider is widening the yield differentials between Japan and all the other major economies. Okay, so that implies to a weaker yen in comparison with uh, pound, dollar, euro, loonie, and etc. So it's this differentiation, it's this very different approach of Bank of Japan and all the other banks, and the yield differentials. Okay, yield differentials is a key driver of the major indices. So thank you to Emmanuel. Euro dollar. Yes, of course, we haven't covered the key, the most popular asset ever. So yeah, okay, rebound. Okay, this is go to the 30 minutes chart, a bit of a pullback before the data, rebound, boost at 115.85, and then a pullback down to the mid of 150 territory. So this, let me just, so there is a flattening. This looks to the boost looks a bit limited for now intraday. So you can see that there is a flattening of the fast moving average. Same stands for the from the momentum indicators, a bit of a mixed picture over here. RSI flatten, MACD the same, stochastic still pointing downwards, fast MAs flatten. Not really sure what's going on, my dear Tumelenko, but intraday picture looks a bit mixed for the moment. So let's find the immediate resistance support level so we could, oops, sorry. So this will help us. So, so okay. Right now, 115.72. Reversed, reversed nearly the majority of the gains seen prior the announcement, turning back down again. So this Fibonacci is not helpful at all. So we need to wait and see the Arutumelenko, at least in the intraday picture. For the time being, it still sustains some kind of a sideways movement between the 115.70 and 115.60 level. So you can see how the Bollingers in this 1 hour chart flatten. So this is the current range in which the euro dollar trades. So you can use that as your immediate resistance and support levels. So as your breakout points. So 115.70 and 115.55. So a breakdown and a closure breakdown of the 115.50 could open the doors to today's bottom at another 10 pips lower, while further increase and a breakout of 115.70 could actually retest, see a bit, the 116 level, but it's ranging. Euro dollar is ranging, and the momentum is not really supporting a rebound of the euro dollar. The fundamentally wise, as you can see, the long term picture and the daily picture, the medium term picture, the the euro dollar has been to the downside since the actually since May, and this decline has resumed in September and extended in October. So um, I think we have covered the outlook of euro in the past, euro dollar, this cross, but currently is at 15, no, 14 months lows. Again, a reason behind that is again the yield differential. Okay, the yield differentials remain in play. More precisely, the 10-year treasury yields are largely driving the asset, the euro dollar asset. So um, um, so not really sure whether it will manage to find some kind of a rebound due to the big miss in NFP today. But as you can see, this is a long run to the downside, far, far away from the 20-day moving average. If I put the channel on, you can see that it's still, okay, oh no, wrong chart. Let me just, so you can see that even from a technical perspective, as long as we don't see a break of 116 or even a return back from 117, the overall outlook for euro dollar doesn't really change. As I said, it has to do with the fundamentals, it has to do with the yield differentials, it has to do with the so far expectations of Fed announcing a quantitative easing tapering in November. Okay, I guess the below expectations job numbers today could provide some support to the euro dollar or due to the dollar, the weaker dollar, but we cannot really tell how long this could last. So So overall, remains under pressure. Immediate resistance at 116.10, more precisely. Um, Support remains the Wednesday's low at 115.25. And let's not forget that ECB remains a bit of a different level of where the different place of where the Fed is. Okay, they have the same, they follow the same path, but not the same, not the same approach of not the same tapering amounts, I guess. So that gap is what adding pressure to the euro dollar. So the comparison of ECB with the Fed, the comparison of the US economy with the Eurozone economy, and so on and so forth. So a lot of downside risk still for the euro dollar. As I said, today's data might provide some kind of a floor to the euro dollar, but it's been to the downside for 5 consecutive weeks. So the long-term outlook remains negative, especially uh, if we consider the slowdown that we have seen in the eurozone. comparison with the US the US one. So what else? What else? Pound. Let's finish with pound. If you don't have any other question, guys, I will call it a day. That we'll finish with cable. Let me see whether anything else came up. Uh, Not really. Okay, the reduction on the tapering is at it's estimated at 5 billion a month. Something I forgot to mention, but until we have plenty of time until November, until the 3rd of November meeting from Fed. So nothing really came up. Uh, so let's finish with pound then. Okay. So pound cable. You're welcome, Emmanuel. So pound, where's my pound? Should be somewhere here. By the way, equities remain mixed, remain flattened, sideways. Okay, let's shift to cable. Okay, this is a 15 minutes chart. Let's start with the 1 hour, to be honest. And I want to ask about oil, but okay. We have cable over here. Cable actually managed to sustain the 136 level, so it remains above it. So if I just start with the daily chart, you can see that we have seen a rebound in October, a breakout of 136 level on precisely yesterday in a closure above it, while today the asset remains above the 136 level, so sustaining gains. So it's nearly at 10 days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Actually, it's back to 12 days territory. Remains below the 20-day moving average, with a bearish cross pretty much over here seen last week. But let's see a bit what's going on. So even though we had a rebound, as you can see from the momentum, there is not really a strong buying of pound, um, and that has to do with the Bank of England and the condition, that the energy crisis and etc. And the UK inflationary pressures as well. So remember that the Bank of England um, signal that is in progress to rate hike. So in contrast with the rest of the banks, it was the only one that wasn't really considering tapering, but it was key to focus on a rate hike instead. So if we compare it with ECB, this is something that do I have euro pound anywhere? So I could show euro pound as well. Yes, I do. So let's put it side by side. So this is euro pound. So we have seen the fact that Bank of England is like more keen to change rates, to hike rates, and on the other side we have ECB and US, which are really keen to. They're focusing on the reduction of the bond purchases and the tapering. This is something that weighted on euro pound, and clockwise it has boosted slightly the cable over here. So So the situation in UK right now, the anticipation of a rate hike, the UK inflationary pressures is that they might last for longer than what was expected. This is something that limits a bit the buying of pound against dollar and even against euro. So you need to have in mind the monetary policies, the fiscal policies, and the fiscal incentives between the countries. This is a reflection of what's going on. Okay, so yeah, we cannot really see, neither from the fundamental perspective, neither from the technical perspective, the pound to the pound, the strong buying against the dollar over here. You can see that momentum remains. And this is a daily chart, by the way. Momentum remains well below zero in the MACD lines over here, indicating that it's still a lot of pressure on cable. And if I zoom out, you can see that despite these rebounds, it's continuing. It remains at the last 11, 12, nearly 12 months lows with momentum negative, uh, RSI still below 50, so failing to, the sentiment is failing to shift to to the positive side yet. Stochastic turn is pointing to the downside again, so this pullback, this rebound, sorry, looks a bit limited, especially since for 5 consecutive days it's struggling to break that level, it's struggling to break the 136.57 level. So intraday neutral to sorry, in the medium term, daily time frame and weekly, neutral to negative. Intraday we had a big boost, a quick reverse lower after the NFP. So after it retested the 136.57 level, it quickly turned down. Currently at the lows of 136, momentum is turning negative as well. So we might see a shift and a retest of today's lows at 136 and 135.85 levels. So stochastic signal a bearish crossover here and it points down, so that indicates a negative bias in the short term. RSI the same, remains above 50, but it's pointing to the downside, and this is a sharp slope. MACD also detecting slowly. So intraday negative bias, while in the medium term and neutral to bearish as well. So next immediate support level stands at 136 and 135.85 level, while on the flip side, resistance holds at 136.57. So that was from me, guys. Yes, we are doing this every week, twice a week actually, to be precise. Usually depends on the news, but we are holding 2 lives every week. Okay, so yeah, just follow us on either Facebook or in the subscribe in the YouTube channel. You will get the notification for our lives there. Utumeleng. Okay, so guys, that was it. Hopefully I managed to reply to all of your questions. So let me check whether there is anything new. Stocks retreated from session highs. Yeah, we think went back to the to stocks earlier, but um, there is there is some pressure on the stocks again. So for example, USA 30 over here remains flat, but to the downside. USA 500 also opened flat near 4400s. USA 100 over here returns back to the day's lows. So so let me check what's going on. Yeah, it has to do with the jobs, of course, and whatever this it means for the Fed policy outlook. But as I can see, there is a big boost also on the energy stocks. So I cannot really see something right now, but Yeah, oil resumes gains back to the highs of to the mid of 79 levels. So overall, um, overall outlook, guys. Actually, let's summarize the behavior so far of the currently of the market. Uh, Dollar did but tried to resume some of the losses. Wall Street and actually in general the equity market are a bit mixed, flattened mainly, except the energy stocks that they have found support. As you can see, oil resumes its rally. Where was it? I have it somewhere. Let's put it back in. So this is oil, resume gains back to 79, back to 79.50 level. So energy shares trading the positive territory, as I can see over here, on the back of a rise in crude oil prices. So in the stock markets, everything it remains flat except the energy related stocks. So have this in mind. What else? I cannot really see something else. So that was it, guys. I think I covered everything. Thank you very much for attending. Hope first NFP. Okay, good for you, Neil. Good for you. So, thank you guys for attending. Hopefully, this session helped you. I'm gonna see you again next week. Take care. It will have a busy week ahead. Actually, a lot of data releases from the major economies like inflation, GDP number, retail sales, unemployment, if I remember correctly, from Australia. So and inflation from China, which is quite significant. So a packed week is coming once again. So take care. Have a great weekend ahead, and I'll see you again next week. So. This was it from us. Thank you. Have a great day ahead. Bye bye.